I do invite Pablo and Jon to the stage. Just whatever you can. I'll maybe close to me. So in this panel, we'll discuss the stablecoins and especially the part.
I don't know if the mic
Yeah.
is working.
Does it work?
No, I don't think it's working.
Hello, hello.
It's super low on volume.
Mine is
It works, but it's they need to increase the volume.
Okay.
one, two,
They
one,
will
two.
increase it. So, now everyone can hear me. Great. So this panel is about stablecoins. It's one of the most important parts in MiCA, and I would say that it could be also the reason why MiCA was drafted. We know that in the 2018-2019, it was a really long time ago, there was a company that was named Facebook and had a plan to issue a stablecoin that is named Diem. And that was quite an interesting plan, but it has not come to realization at this moment. But we have two guests today with us that are working on stablecoin projects. Thank you for joining us. First, I would like to introduce Pablo. Pablo Veyrat is the co-founder of Angle Protocol, which issues the biggest and the most traded euro stablecoin on the market, is the AG Euro. Thank you for joining us.
Thanks for having me.
And we have Jon Gunnar Ólafsson. He's coming from Iceland, really far away. Thank you for joining. He's the legal counsel of Monerium, having been with the organization as the first employee. So this is very telling, having a lawyer as the first employee in a startup. And it has paid off. So Jon led Monerium's electronic money institution application with the Central Bank of Iceland, which has granted in 2019 and becoming the first EMI authorized to issue an e-money on blockchain networks. Thank you for joining.
Thank you, Marina. Honored to be here with you.
I would start with you, Jon. And I mean, I have a question that is kind of directed to both of you. Let's think about MiCA and why MiCA was drafted, and especially the part that talks about stablecoin. So MiCA has 4 goals. One of the main goals is, of course, legal certainty. One is consumer protection, and MiCA also wants to promote innovation. But one of the most important ones that is linked to stablecoins is the protection of monetary policy, or in a way, protection of euro. How do you see MiCA impacting stablecoins, and especially in the future, how the rules that MiCA applies will be, in a way, promoting or limiting what you're doing right now with Monerium?
Yeah, this is a great question. So, as you mentioned, it was pretty obvious that MiCA was drafted to counter the Libra project. But like, when we saw the first draft, we have already received a EMI license in Iceland. EMI is an electronic money institution license. It has been in the Eurozone for 20 years. Companies like PayPal and Revolut have operated under this regulatory regime in Europe for quite some time. So when the founders of the company did a report with a local bank, they identified a problem with this space was that in order to do something, you need to have a settlement, like you need to have real-world assets, you need to have a compliant form of money living on the same ledger. So they thought, all right, what's the best regulatory framework for that? And they identified the e-money framework, which is, in our opinion, a fantastic framework. So when we first saw MiCA, we wrote a response to the proposal stating that we thought it was fragmenting the e-money standards. We thought like it was obvious if you're issuing a fiat-backed stablecoin denominated in euro, it should be regulated as an e-money. We thought it was, quite plain and simple, but they didn't listen to us. So we are now with the e-money token definition in MiCA, which requires that you are an e-money institution or a credit institution. This kind of validates our approach that the EMI was a proper and a fit vehicle, or the EMI directive, for issuing fiat-backed stablecoins on chains. So yeah, it obviously brings regulatory clarity to the space, and it's I think it's a net positive, but there are some things there that I'm not quite happy with that will maybe go in a little bit further afterwards.
Yeah, I would like to just have a follow-up question here. With your experience in the past obtaining this license, we know that there was a directive that was existing much before MiCA was starting being drafted. What is the difference between obligations under that directive and maybe obligations within MiCA?
Yeah. So there are quite some further requirements that MiCA put forth. So with regards to how you safeguard, I don't know if anybody knows what e-money is. Like when we started to apply for this license, we didn't really know what e-money was, but like we knew blockchains, but the regulator was fortunately knowledgeable of e-money. So e-money is basically a electronic circuit for cash. It's it's a digital representation of value in a sense. So the further requirements that are laid down in the MiCA is that so how we safeguard our customer assets is that like we receive money, fiat currencies, and we have to safeguard it properly, and then we issue a token on the blockchain. So it has to be backed one-to-one, right? So in the e-money directive, we are allowed to denominate the asset that we backed in any currency. There's no restrictions there. There's a restriction on domination. It has to be backed in euros if you're issuing euros and vice versa. And then probably the worst requirement that we at least think is the restriction of allocation of safeguarded assets. So you have basically two options as an e-money institution. You can either place the customer funds in a segregated account that needs to be protected for the benefit of the customers in case of insolvencies, or you can invest it in high secure liquid assets. MiCA requires that 30% of the safeguarded funds is at all time kept at a segregated account with a commercial bank. We believe that's a kind of a weird requirement because commercial banks can issue e-money tokens as well. So they're basically the competitor and in a way gatekeeper. So we are dependent on commercial banks to have open up accounts in order to safeguard our customer funds, and we believe it like increases the counterparty risk of our customers because as we know from 2008 banks can go insolvent as well. So and there's also some ban on redemption fees. So e-money token issuers, they are not allowed to collect fees when redeeming e-money. And then there's some requirements to have a recovery and a redemption plan in place, which I think is relatively a good thing, but I don't see why it shouldn't apply to just all e-money institutions. And then there's like this cap when it's denominated in not an official currency in the Eurozone. So I think what has been talked about here before is like the same activity, same risk, same rules. I don't see like how blockchain technology, like these further requirements, they're not created to counter specific blockchain, risks. This is not like a technical requirement. These are like back office tasks, which are although really important, and these things need to be, correctly done, and we need to do this diligently. But these are not like risks that relates to the technology, or like there are completely different risks that aren't even addressed in MiCA, and maybe EBA or ESMA will draft some technical standards or whatnot. But yeah, I can't see why like they're putting further requirements there because they have nothing really to do with the technology that is being used.
Thank you so much for those comments. Pablo, what do you think about MiCA, and how is it going to impact the work you're doing right now?
So I think Mika is most welcome. What we're doing with Engel is a bit different from what you are doing at Monerium. So Engel, we are doing decentralized stablecoins. We don't have fiat at the bank backing AG Euro. We have cryptocurrencies backing AG Euro or Euro stablecoin. So essentially, we have a decentralized protocol that works like Maker. What I really like about Mika is that it's bringing some clarity in the space. You know, when we first started to think about designing the protocol in 2021, no one was able to tell us what we were risking and what we were not risking when creating our Euro stablecoin. Now with Mika, it's kind of clear. Before it used to be like it was Kafka. You know, you were speaking to 10 different lawyers. You were hearing 10 different things. And now we know exactly what we need to do and what we cannot do. So this is most welcome. Then what I really appreciate also about Mika is that in some way Mika is an acknowledgement of the importance of Euro stablecoins. If you are regulating something, it means that you consider it's important. And what we always stand for at Engel, we stand for European monetary sovereignty. As contributors to Engel and to AG Euro, we are here to make sure that the industry, the blockchain industry, is not only built around the dollar. And we are late in the ecosystem. You know, like the stablecoin market, it's a $140 billion market, $140 billion market, and the size of the Euro stablecoins, it's barely, let's say, 300 million. So there is kind of a discrepancy here, which means that Europe is lagging behind, and Mika and having a lot of smart people, smart regulators, smart teams starting to address and to start about, okay, how do we design a Euro stablecoin framework that is that will protect customers and users from scratch and that is scalable? Well, I think it's a good option. The only thing I think that, and I think we won't be able to know how it's going to look like and how it's going to be implemented until it's really implemented, but there are two kind of players in the DeFi ecosystem. There are players who play by the rules, and there are those who are not following the rules. And what I fear is that European players will try to respect everything that's in Mika, spend the money on lawyers to fit the regulatory framework, will kind of be late with respect to those who do not care about regulation because they're not based in Europe. So I'm kind of curious to see how enforcement is going to look like, and if people who are playing by Mika rules will indeed not be penalized. And this is super important.
Oh, that's very interesting. So maybe I'll go back to what Jon mentioned before, the cap. I would maybe like you both to comment on this, Pablo, if you...
Yes.
The specific part in Mika that was quite controversial.
The cap doesn't make sense for a stablecoin. A stablecoin, it's a cryptocurrency, but that is meant to be stable. And if you put a cap on a stablecoin, and if there is a lot of buying pressure on the stablecoin, and if the issuer cannot issue more stablecoins, well, the stablecoin is going to depeg, and it's no longer going to be stable. So just for this reason, for me, the cap doesn't make sense at all. And the other reason is, like, you have to see stablecoins as what they really represent. Stablecoins are better than cash. It's more traceable because you can see on the blockchain everything is public. If I send 1,000 AG euro to Jon is like everyone will be able to see that I send 1,000 AG euro to Jon. So there are already limits on cash. On the amount of cash you can spend. But given that there is this traceability, I don't think it makes sense to apply the same rules to cash to stablecoins. So for me, it doesn't make sense, especially when you have the competition with the US. And here, the blockchain industry, we're still in the early days. And what I really want to avoid is lagging behind, just like Europe is lagging behind in technologies. You know, we speak about GAFAM. The only big tech company in Europe is Spotify. And come on, like, it's supposed to be the future of finance. And I don't want us to be lagging behind. I don't want all European companies to be spending in USD stablecoins because Euro stablecoins cannot scale to the extent they need to be able to support it in their payment systems.
Yeah, maybe jump into that. So the cap is introduced in, I think it's like Article 19B or something like that, and it is applicable to asset reference tokens when used as a means of exchange. So, or like it's used as a payment instrument, right? So you are using asset reference tokens to pay for your groceries in the store, or you're using asset reference tokens to pay your landlord the rent, right? So then there's a cap put in place, which, like, from the monetary policy perspective, I kind of understand. Like, I think the European Central Bank wouldn't be happy if they, the European Union would be using a private coin, which wouldn't be like the euro. So I kind of understand it from, like, the monetary policy perspective, and the lack of, capabilities to implement monetary policy. But then it also applies to e-money token issuers when they denominate the e-money in a different currency that isn't like an official currency in a member state. And there's one interesting thing in the regulation. So this is, it's reflected in, I think, paragraph 3 in article, I think, like 52 or something like that. And that article is laying out specific requirements for e-money institutions that issue e-money tokens, not like credit institutions. So just because of the placement, I'm kind of confused if this cap applies to commercial banks when they issue e-money tokens, or only e-money institutions when they issue e-money tokens. And I if that's the case, I would like to learn, like, what's the reason behind that, because I don't think it makes sense. But yeah, this cap and, like, how you measure, like, for example, when Pablo was mentioning, if he sends me a euros on chain, like, what you see is, like, you see the sender's address, the beneficiary address, you see, like, the transaction hash, the volume. But how do you, like, the implementation of it, like, how do you know that, like, he is paying for a real life goods or services? Like, that's I don't know how, you should implement it or measure it. I don't know, like, how practical it would be, but, like, yeah, I'm all ears to hear, some clever suggestions how that should be conducted.
One of the person that is here in the audience, one told me when she was talking to the regulators, is their number one concern is that their local currency is used in their jurisdiction. And I think that we can see this in MiCA, but at the same time, I think it's also very interesting what you said is, like, once is how this is going to be implemented. And I think that maybe we can look a little bit into also the other things that are happening in the EU, like the AML package and other rules. But at the same time, thinking about, is this in a way the article and the way how the European Union wanted to protect their currency by, for example, saying that the issuance would be stopped. That would have a detrimental impact not only on the EU but globally for issuers of stablecoins. And I know that also both of you mentioned the public blockchains and the information that we can get from those blockchains. So maybe we can comment a little bit of, again, looking into what happened in the last month and especially weeks with FTX. What is the difference, and where do we see, positive aspects being drawn from decentralized stablecoins, decentralized finance in general compares to centralized ones?
So I don't think that the term decentralized finance is a good term. I think that what matters the most is the concept of open finance. So you have finance that is not transparent, and you have finance which is transparent. And transparency is the most essential feature of finance on blockchains. FTX was not transparent. Luna, it was supposed to be Terra, it was supposed to be a decentralized protocol. No one knew how really the protocol, people knew the protocol, but no one knew how they were buying their bitcoins. No one knew what operations they were doing with their treasury. They were not transparent. And everything that happened with FTX, so if you put aside all the bad PR, the fact that we lost a year in our wider public acceptance, the good thing in that is that it's really a case for transparency and transparent finance, and DeFi is a sub-case of transparent finance. I don't mind having centralized actors playing the centralized game. The really cool thing about DeFi is that if you think of DeFi protocols as companies with assets and liabilities in their balance sheet, well, everyone can see the assets, and it's the same for Binance. You know, everyone can see the assets of Binance. You can see their wallets, how much they own. But the difficult thing to know is to know the liabilities. Binance, you don't really know how much they owe and to who. It was the same for FTX. But for decentralized stablecoins and for centralized or decentralized in name-only protocols, which are trying to play decentralized but which are not decentralized, you can see the liabilities. And it's really a proof that this kind of system, I mean, the FTX case in comparison to this kind of systems, it's a proof that DeFi, it may be inefficient, it may be a closed loop that doesn't serve much utility at this point, but it's a good point that it's a good proof that it could be helpful in the future to avoid this kind of situations. And this is what we're really standing for at Engel and for the development of AG Euro. You know, I don't mind about AG Euro not being the biggest decentralized stablecoin. What I care about is an open financial ecosystem that works transparently with centralized actors, because even with centralized actors, because I believe that that's how blockchains can really bring value to and really bring a change to the old system.
Jon, maybe let's look a little bit at the future. There is a discussion around the digital euro, and let's think about how can, for example, the future of digital euro, the future privately issued stablecoins, and DeFi in general, how can they coexist in the next years?
Yeah, the digital euro or like CBDCs, this is a really interesting topic, which also like kind of emerged after the Facebook Libra shenanigans. So yeah, I'm kind of like, I did follow it really closely when it was like emerging back in the day, but now I kind of like have lost track, but I'm a bit confused. Like I don't really understand, like are they issuing like a payment instrument, which like, is it going to be a token in some shape or form, or like are they just creating a new payment system, right? So at least like what, and like for what purposes are they doing, you know, the digital euro? Like are they, you know, do they want to, you know, try to decouple from the dollarization like in global trade and financial markets? Do they want to like strengthen the euros, or like what problems are they trying to solve? And like from the there was some progressive report issued by the European Central Bank lately, where I think the main focus was on like e-commerce and digital payments, and you know they're trying to create an alternative scheme, you know, because they believe you're too, you know, dependent on our cards and the merchants, the Visas, the Mastercards, right? So I mean, that is maybe a fair game. I don't know, but like I think the central banks could support like private issuers a lot better. And like, is it like within the mandate of the central banks of like being innovating in payment systems, or like be like competing with the private sector? But what they could do is to, you know, support private issuers by allowing them to deposit customers' funds with the central bank. So like e-money issuers, payment service provider, they could, you know, they would be granted access to, you know, accounts with the central bank. So like the customers' funds would be like so the claim on the e-money issuer would essentially be a claim on the central bank, right? So this is something that's called like synthetic CBDC, and was introduced by IMF economist Tobias Adrian and Thomas Grifoli. And like this will, I believe, at least like level the playing field between commercial banks and non-bank institutions like e-money institutions, and probably foster innovation a lot more. But like, I don't believe maybe the central bank should be spearheading, you know, a payment innovation revolution. I think, you know, the private sector is better equipped to do it, and maybe a bit more like align with like what are the current needs of the, you know, of the markets. So yeah, I'm quite skeptical of it, and like I don't think that like it's still in like an investigation phase. We don't know yet like how it will, you know, look like. So yeah, it's at least interesting.
I think one or two interesting points from this perspective are definitely privacy, financial privacy, and also interoperability between the digital euro and the other part that crypto represents in a way. would you have any last comments? And I think we would have few minutes for questions from the audience. More maybe linked to the future, or like how are you going to, what are your next steps in implementing MiCA?
So not maybe an implementing MiCA but on the interoperability, on the interoperability thing, one of the key elements of finance and blockchains beyond transparency is the modularity. Like Engel has 50 million under management. At the top we had 250 million, but it still makes us one of the biggest Euro stablecoins. And this money is invested on Compound and on Aave, so we are composable by nature. And in the future, you know, there is different ways to issue a euro, but if other like centralized stablecoins were to emerge beyond Monerium, and we are already working together towards composability, but if a CBDC was to arise, then in some way with Engel we could sort of contribute to creating a unique standard of Euro stablecoins, you know, because all the banks would want their stablecoins, like JP Morgan is thinking about creating their own stablecoins. And decentralized stablecoins can be sort of the standard unifier to avoid fragmentation of the stablecoins and keep a neat UX. This is, I think, the value that decentralized stablecoins have to bring with respect to centralized stablecoins, and we will keep pushing towards this vision.
Maybe to touch upon like the peer-to-peer aspect of the digital euro, like at least according to the progress report, it seems to like that will need some specific carve-outs from pre-existing like AML regulation, because like they want to, you know, have anonymity within the payments. So like, will the anonymity requirements only apply to the digital euro, or will other private actors, you know, be able to benefit from it? Like that's like that would be interesting to know. But maybe the last point, like Monerium, we, you know, our vision is to become a significant e-money issuer, which is a term defined in MiCA. It's like when your issuance receives, like when you know, manage to get to a certain level. But there's one thing there which is quite interesting as well, is like if you're an e-money institution that issues significant e-money tokens, you're like, you've grown up and you're like a big institution right now, then like the like the supervisory like the like your competent authority, they won't supervise you longer. It will be moved to the European Banking Authority, but that doesn't apply to commercial banks, like when they reach the milestone as well. So like I think it's quite weird, like why are we not trusting the competent authorities to, you know, regulate, like if you, for example, like if you have a German startup that issues e-money and you have Deutsche Bank, right? They start off by being regulated by BaFin, then they both like emerge as significant issuers, and like the startup is all of a sudden regulated or supervised by EBA, but like Deutsche Bank just still keeps being, you know, supervised by BaFin. I don't understand this, and I think like I would love to hear some, you know, rationale behind those decisions, because it creates like a lot of overhead. Like for example, if you're Germany, you speak German with like, and like you're dealing with BaFin, it's like it creates some like different admin headaches, and like there's some like, I don't know, it kind of doesn't make sense to me.
Maybe one last point also is that we're talking about a lot about regulation around stablecoins, but we're not talking about adoption, and adoption is not there yet. Crypto works and stablecoins work in the era of bull market when there is a lot of speculation, and the next wave, next things happening in the market will be about creating the real use cases. People know that we can create these use cases, because that's why we're also bullish in this technology. We believe that this technology can revolutionize a lot of existing use cases, but the winners of tomorrow will be the ones which will be able to comply with MiCA, while also enable, like giving people no-brainers to shift from old use cases to new use cases.
Okay, we'll have time for one quick question. I see the hand there. Maybe here.
Hello, thank you very much. Pablo, a question to you. You put it very nicely. Open financial ecosystem that works transparently. This is where blockchain brings value. Can you please bring it back to the basics and tell us what type of issues are we trying to solve with the existing financial system?
It's true that I should have explained it a bit more. The easy thing to explain here is like the comparison with FTX, for instance. Having exchanges which are fully transparent, fully regulated, but on-chain, it works better than having exchanges where you put your deposits, but you don't know where your money is going. So, but this only regards the crypto ecosystem. One thing we can improve on, an example is the Forex markets. Forex markets are markets which are not open 24/7. There are different marketplaces where trades are taking place. So liquidity is already a bit fragmented. On blockchains, you could create a single Forex market that's open 24/7, single price feeds, tighter spreads, more transparency on who the players are, and you could see if there are market manipulations or not, thanks to the transparency brought by blockchains. So this is just one case among many. You could also see investment funds. Investment funds, you don't know for the AML and KYC policies of investment funds. Like investment funds, you don't know who the investors are. You know, but it's kind of inefficient to go back to the ultimate beneficial owners. If you have funds which exist on chain, you can see the addresses which deposited in the funds, and if you're able to trace who the addresses belong to, well, you get more transparency, and it becomes cheaper to raise funds. It becomes cheaper to invest, and the cost of capital for people raising funds can be smaller, not because people with crypto funds are taking more risks, but because structurally their startup cost is way inferior than what it would require if they were doing it off-chain.
And I think these are the values that need to come out when we're talking regulation and where Europe is going in the future with this.
Yes.
Thank you so much. Thank you, Pablo and Jon. See everyone in a few minutes.